What is up, everybody? Welcome to TA Talk. This is the show we bring you every Wednesday right here in the Chart Prime Discord. OC Guy and myself bringing you guys everything that you need to know for some trade setups, how to use the indicators, whatever you guys want to talk about. Consider it an AMA, consider it a learning lesson, an opportunity, and consider it most importantly to be where we come together as a community and look for some trades together. So we also got a special guest in here today, Major Payne in the house. What is going on, my man? What's up, bro?
Thank you so much, guys, for this. It's an honor to talk with you guys here live. I'm pretty nervous, obviously. It's my first time talking after like a year live on camera. But yeah, pretty gassed up to tell you what I kind of drew in the last few days about a Wyckoff pattern.
Awesome. Well, I'm going to go ahead and drop my screen share here. I just had it up showing a little bit of volatility market here on the heat map, but we'll let you share that stuff and teach the community here because that's what this is all about, right? But I want to give a shout out to Kimmy Cole in here. We got Not Lethal. I saw Lex G, my man Lex G in here. We got all the people in the house. On Valentine's Day here in the U.S. The Hallmark holiday that we created over here. And totally marketed and manipulated to be way more than what it is. So for those that have someone special, you probably and you're in the US, you should probably get some chocolates or roses or at least make her dinner tonight. For everyone else, happy VD. That's all I got to say. Let's go ahead and get into what you got, Major Payne. What you working with, bro?
I want to thank you, Army Piper and OC, for being one of the best teachers I've ever seen in 7 years in crypto. The stuff that I learned since June last year, it's unbelievable, unbelievable. And
awesome.
my trading got way much better in 8 months, and my confidence got way much better. And I want to thank you for everything that you guys do.
That's how I started too. I stumbled across Chart Prime on accident and sat in one of OC's classes and went, "Oh, this is game changing." And that's how I just moved in. I showed up at his house one day and said, "Can I get a glass of water and sit on your couch for a second?" And he said, "Yes, sir." And now I still live in his guest bedroom. I just moved in. So yeah.
Okay, nice. Okay, so I'm gonna share my screen to see if you guys can see it. Can you see it?
We got it.
Cool. So my analysis about this Wyckoff, I know everyone loves Wyckoff pattern. I love Wyckoff pattern. And what if we're going to have example 1 instead of example 2? Because everyone's looking at example 2, FOMO is kicking in everywhere. And what if we have an example 1? So my example 1 that I finished today, and OC, thank you again for giving me the opportunity to. I thought I'm going to just show you an opinion. I never thought I'm going to actually talk about it live. What if option 2 folds and option 2 looks something like this? Basically, the PSI is preliminary supply, right? The BC is the buying climax. And everyone kind of sees the support and resistances, and everyone kind of remembers these numbers. Everyone sees them perfectly all the time. It happened all the time in this cycle. Then we go for the AR. The AR stands for automatic reaction. And then we go for the secondary test, which is bang on the next resistance. And then we have a sign of weakness. And everyone gets scared because obviously it's a sign of weakness. Oh my God, we're going to retrace down, pull back. And then we have the uptrust. Uptrust is not the full uptrust that I was looking for. And then we have a small, I'm just going to delete this so we can see it. I just wanted to show the numbers so you can like see it better, but I'm going to delete this. And then after the first uptrust, we have a mini distribution phase here. And then we have the uptrust after the distribution phase, which kind of happened today, actually. And it broke my main resistance, 52K. And why am I saying that it will come down again? This is another sign of weakness. This can happen. It's phase A, B, C, D, and E, obviously. And we are now at phase C. And by dates, it kind of happen. It can happen because of the halvening event. And what happened in the last cycles in 2020 and 2016? The same thing. We had a pullback all the time. in the last before the halving, a month or 2 months before the halving for a final scare. And LPSY stands for what is it? Last point of supply. And then we have another sign of weakness on the next support, which everyone knows is support. Everyone knows the 40K barrier, 300. So we have another sign of weakness. And then we have another last point of supply, which can take us to phase E. If this cracks by 11th of April, and the halving event also is on the 14th of April, we can get a final scare and a minor capitulation. Why I'm saying a minor capitulation? In order for the miners to keep the lights on, they need to be above 44K. So technically, they're in profit now. Only now they're in profit. So they need to keep, in order for them to keep the lights on for the next year, which is this bull run, they need to sell in profit. They don't want to sell in break even. Logically speaking, is if I was a miner with 100 million mining operation, I would sell in profit. I will never sell at break even because I have to keep the lights on for the next year. So you have to always think about why is the hash rate up? Why is the all-time high? The all-time high is the hash race, and how am I going to keep the lights on for the next year, which is this year? And we can easily go to support. I'm not sure that it's going to be probably 30K, but the support lines that I draw here are pretty much the 37K and the 35K, 34.9K. And from this top that we see from 52K, yes, we can go to 52.8. That's fine. 53, not a problem. We can spike up. But it's only a 33% drop to the support line of 35K. I'm not sure if it's going to go to lower than phase E because it can go. Obviously, it's crypto. Anything can be possible. But the main resistance is, everyone knows, is 30K, 30K.5, 33, 32. So, but I'm in the boat that it can happen up to 35, 34,700 is my main bottom. What obviously, and then after we see this, we can have a spike up, a fake out. Everyone gets scared. The pressure comes in, as we saw it in the previous cycle, and everyone gets scared. And the smart money, they can see this pattern, and probably they even make this pattern. Obviously, let's see if it plays out. And OC asked me a question: where do I get these support resistance lines? Like why here, why there? Well, let's go back to another cycle. Oh, my heart is shaking. Sorry, I'm so nervous.
It's okay. Take a deep breath, bro. You got this. You're doing great.
We can see a very similar, another example to Wyckoff pattern. Obviously, this was the beginning of bear market with 2022, but it can play out. It looks exactly the same as this. The one that I just drew. It's very similar. I'm not sure. It's not going to go all the way down there, but this pattern is very similar to what we see here. Hence why I selected this. And if we zoom out completely from the support and resistance lines, if we zoom out, we know that this was always the peaks and the rejections or the retests. And until 30K, we never broke 30K, obviously only in the bear market. But these are the support lines. This is the resistance lines. And we've seen this before. We see it 1, 2, 3, 4, 5 million times, 51, 52. Always happen like a little rejection. They always have like a magnet between 40K to 52. So a lot of stuff was happening here for years, from 2021 all the way to 2022. So what if everyone can be wrong by looking at example 2, because everyone's looking at this. I'm kind of a bit of bearish moment because I kind of seen capitulations. I've seen drops in cycles that was 83%, 86% drops right before the capitulation happened, and everyone got scared. I've seen the market cap going from 1 trillion to 100 billion, and I never got scared because obviously the best way is to have a long-term perspective. And that's just one of my opinions. I'm not saying that it can't happen, but I just wanted to show the class and everyone, what if we can have this Wyckoff event, the example number 1. because we all know the whales are manipulated, like they manipulate every single thing. And if you look at the Bitcoin, it's 92% of the Bitcoin is controlled by 10 wallets. 92% of the entire Bitcoin supply is controlled by 10 wallets, which kind of puts me to see, like, what if those 10 guys, they know each other and they can just go, oh, let's do a Wyckoff pattern. What if they know each other, or three of them? They can move the market any way they want. Anyway, that's all I want. Sorry, that's all.
I see that now. No, I actually have some response on his call there that I find very interesting on my master chart, because I have one of those also. So I'm going to bring that up here in a second. But it doesn't take much to get it down to one of those levels there, guys. I mean, like, breaking news right now, Genesis Court has been cleared to liquidate their GBTC shares worth $1.38 billion. Just one event like that can start a cascade of downward movement. So fundamental analysis side, that's what you got to, things like that, you got to remember, and you got to stay plugged into all that info. So, but yeah, that's breaking. That just came out literally as he was talking about some event. There you go. $1.8 billion, almost $2 billion worth of GBTC Bitcoin can now be liquidated. So by the courts. So what I want to show, if you can drop your screen share, Major Payne, and I'll pull up what I'm seeing. That's actually pretty interesting with your numbers there. Let me get
Thank
it
you
up.
so much, guys. Thank you so much.
Yeah, awesome, bro. All right, guys. So taking a look here, this is my master chart. If we go back and look here in history, as you know, we always look at the historicals, right? They matter. They have a vote. We do see these pullbacks that occur right before the halving, like right here. We've almost touched. We got going here. One, got Fibonacci channel, and they're running diagonal up through there. It covers the entire history of Bitcoin. So let me bring it all onto perspective here so that you guys can see it. There are the Fibonacci channels running all the way up through history on Bitcoin, okay? This bluish silver line down here, this is the platinum pocket on the Fibonacci channel, and then, of course, the golden pocket. So if we go back and look historically at the horizontal fibs, they run from candle close all-time high to candle close local bottom, right? The bear market bottom. And when we have these cycles, you can see the halving lines. That's these horizontal yellow, vertical yellow lines here. We do typically get rejection out of so these three phases. You've got your bottom phase one. Phase two is in between your 50% in the golden pocket. And then phase three is above the golden pocket when we get in price into there with the candle close on the weekly. These are weekly candles. We get very close to the 887 and then reject down into the golden pocket. It happens over and over and over again. As long as we don't close a candle below that, a whole candle below that, then we're still in phase three. And if you look at the retest here, post halving of the 0.66, that is typically the run up we have right after the halving for the entire market run, which takes us into the next cycle top. And again, horizontal fibs, one, phase two, phase three. You see, we lost completely lost phase three way before the halving on this cycle, and we went back into a phase two accumulation. Well, look what happened here. We went into phase three. We came back into the golden pocket, closed the candles above that 0.66 before the parabolic run after this halving right there, okay? So if we take all of that and we take that into account and we see how this applies to the current cycle, there's some interesting things that correlate with what Major Payne was saying on his chart. And I do believe that in the current cycle, by the way, guys, that we are more in line with mirroring the first cycle than we are the second cycle, just because of how long the bear market bottom was. We had a very short bear market bottom in the phase one during the second cycle. This last cycle, very long, like the first cycle. So if we take a look at where we are now in here, we got a rejection off of the point, the 786 here, right there. We got that rejection off of it. We bring it into focus a little bit, make it a little bit bigger so you guys can see what we're working with over here. We did get that rejection right there off the 786, and we tested perfectly the golden pocket of the horizontal fibs again. But this happened pre-halving. Okay. So if we look at this from the perspective that we can still come all the way up here, hit that $55,000, $56,000 range is what I have it on here for the platinum pocket, by the way, on the horizontals. This is based off of candle close of the all-time high and then candle close of the bottoming, right? If we take a look at this and we run this, something similar to this, where we're in this platinum pocket and we break support of that 786 a couple times, come up and hit, right? If we were to do that anytime soon, there's a couple of things that I want to point out here on this chart for this. If we were to do that anytime soon, a push up there, it doesn't even have to hit the top of you saw the first one, it only went up to there, about 54,000 would be, and then come back down and come into that golden pocket again. That golden pocket is going to be around $38,500. If we wick below that prior to the halving, about as low as we can come on this prediction chart would be about 34,800. And the reason that I say that is if we go any lower than 34.8, or even right now as low as, if we had a massive crash right now, 33,300, we would be looking at breaking the platinum pocket. That is the 786 here on this long-term diagonal. Now, we've already had a first-time event occur this cycle because we broke into the golden pocket for about 2 months and then lost it, retested it right here, and then that was what sent us down to the bottom, okay? This is the first time we've ever done this. We go back and look at previous cycles, wicked perfectly to the golden pocket at the COVID crash. Go back to the other cycle before that, perfectly touched the 786 on top. That was the bottoming, right? Well, we had a bottom here, but it hit the golden pocket. We've never, ever broken this golden pocket on the Fibonacci channel until this cycle. So when people talk about, well, we've never had a Bitcoin crypto winter at the same time as a macroeconomic event, you're right. And that played out. We broke a new level. We went lower than we ever had before. If we break into the platinum pocket, guys, we've only got two fail safes for us. One would be a wick below this, hitting that 50% line, which is a bullish move to hit the 50 and bounce up, which is coming in at about 32,600. At that 50, if we broke the platinum pocket, first off, alarms and alerts everywhere. If we break that 50, we have to assume that the 887 is in play of this platinum pocket. And you would be looking at a bottoming here somewhere in the ballpark of $22,000 to $25,000. If we break the platinum pocket, the pain that is going to be felt in the investing world would be massive. That is why ever since we were hitting the bottom here, I called, well, we've got to be moving up here soon because we cannot break the 786. Structurally, fundamentally cannot break the 786. Same as here. When we were hitting this and we were stuck underneath this 382 here in the show, I was talking about we have to be moving up soon. We did. I believe that about the lowest you will see in this cycle will be about $35,000, and that is only if it happens sooner. The longer we stay higher, the higher the low is going to have to be to stay in this structure. So I just wanted to point that out. And, I keep seeing things like people talking about Bitcoin is dumping right now. This is why I like to look at weekly charts. This is a zero stress candle for me when I hear people talking about Bitcoin dumping right now. I have a wick that's probably hardly visible on your screen right now. Total. So yeah, that's what I'm seeing on there in line with your Wyckoff distribution pullback. That's what I'm watching is that 786 there. If we do pull back again, if it's immediately in the next 2 weeks, $34,000 range to $35,000 range. If it's post halving that we do that, I'm going to be looking, I'm going to have to say it's going to be that 38,000 would be the retest, which would be absolutely bullish. If we come down here, guys, I'm going to let you know right now, I've still got dry powder. I got about 17, 18% dry powder. If we come down post halving and we hit this golden pocket above the 786 and we hit that support line of about 38,500, that is super bullish because it is this before that. It is also this post halving before that. So yeah, let that $38,000 come in past that dash line there, which is the projected next halving, and I'm dumping that 18% that I have left into my crypto. I'm taking a second mortgage out on my house, and I'm selling the services of my son over here to whoever will buy them, so that I can buy more, because that would be the most bullish thing I could see. Absolutely mimicking, mirroring, move by move, step by step previous cycles. So I just wanted to put that out there.
Thank you so much,
and I love how his data lays out perfectly with the historical trend that I'm watching for. I'm watching for that post halving touch of the golden pocket right after the halving. I'm gonna, as soon as it happens, I'm gonna be dancing the jig through the house. So it falls right in line with what he's saying. I just think my levels are a little bit higher than his some of his call shots on the downside. So
I just want to add on the Fibonacci that the Army Piper said, which obviously I don't think we're going to go up to 30K, but this is the exact same numbers as he's pointed out on his chart: 38, 37, and 35. 34, 800, which is, I'm not sure that's going to go lower than that, but we can have a little scare off just between these zones: 38,000 and 35,000, 34, 800. And that's all I want to add. I don't think we're going to go this far, but it can be an option because it's crypto. But and it lines up with exactly the halving date, where it can have this final scare off before we shoot off. And that's all I just wanted to add about the exact same numbers that Army Piper has his Fibonacci. I love his Fibonacci. He's that way, like, I don't know. Pretty amazing. That's all I wanted to have.
I got real fast on that. I got a video that we're going to be dropping on Piper Academy on OC and OC Guy and I's YouTube channel. I'm going to be dropping a video on how to reproduce this chart on your trading view. So I'll be watching out for that video coming out. So if you want to get the master chart, the Bitcoin master chart that I call the cycle sniper, then be watching for that video to drop. It's going to teach you how to put this on your chart, and you'll have it as an extra chart that you can go and reference whenever you need to. So
amazing. I really appreciate that. And also I'm on daily, so because I've seen your chart was on a weekly, more macro perspective. On daily, you kind of see it better, the Wyckoff. On weekly, it's kind of hard to do the Wyckoff. I try to do the Wyckoff on weekly, but it's very hard.
It is hard. All right, what else you guys got? If you guys have any questions, let's take the audience for a second, because we got a lot of people in here watching right now. There's like 40 viewers in here right now. Let's go ahead and check the audience. Let us know in the chat over there, guys. There's a little chat bubble in the top right. Click that and you can chat in here. That's where we're getting all these comments from that people are making. Let us know if you guys have any questions, because on this topic of what I just showed and what Major Payne just showed, and we'll break this out and try to answer your questions. So let's give them a second to reply. What do I think about TPX? Saeed said. I'll have to look at that chart, brother. I want to see if there's anything in here. Win 30,000, sir. I don't think we're gonna hit 30K, Kimmy Cool. I don't. We are in the cycle of trend upward, and we just showed very, very strong support levels in the. Okay, he's joking. Kimmy Cool, don't do that to me, man. Yeah, you won't find Crypto Savvy or Chapo Crypto in here. So we don't have no 3K, 8K, 12K calls. So
as Army Piper said yesterday, I think, when he sold his BTC, I kind of got out on a few positions. So I'm 50% dry powder now, waiting for a big pullback. But my main target is 38,300. About that. And then I'm gonna, the way you said, I'm gonna go all in.
I've been waiting for over a year. Lunar Beaches said. Lunar Beaches says he's been waiting for 30K for over a year. Yeah, it's let's see. When's the last time we were at 30K? That would be October of 2023 was the last time that we were there, which, by the way, is when I reaccumulated because I sold out at 31K rejection on Bitcoin. Here, let me show you. Let me pull it up here and I'll show you. Drop that chart down, Major Payne.
Yeah, sorry.
Yeah, this is the last time we were there. We had this rejection line here from this previous high over here. And we came up and we had rejected off of 31,000 once. It came down, started to come back up in. I was pretty much all in when we broke here. at $20,000. My average Bitcoin buy price is like 23.2. Um, and then when we got the rejection at 31K and it pulled back, I got a little nervous, but I saw that it caught all this previous resistance or support here that was resistance in that price range there. And then when it came back up, I sold everything. 100% of all my crypto at 31K, put it into a 5% APY earnings, and was sitting on all that money, making 5% monthly or 5% annually APY paid monthly out in USDC. And when it came back down here, we were getting close to the line here. I was looking, and when we broke above that 50% line, 382, my bad, 382. I got back in on October 21st. So it'd be about right here in between this two candles. And that's when I was pretty much 85% in all the way up. So done really, really well since the last time we were at the 30K mark, guys. So, yep. Yeah, I agree. I'm going to address a couple of questions here, and then we got some requests for some smaller time frame TA here. So, Saeed was asking about the SP500. SP500. Yeah, there we go. Where is it? Oh, yeah, SPX. That's what he said. So we'll take a look at that. And then he asked about, hey, Piper, there's an 85% chance that the U.S. can enter recession. I don't think that's true. Here's the deal with recession. It's the longest awaited recession in economic history, period. We never ever get this far of a warning in advance of a recession. For a recession to occur, we have to have a destruction of the labor market. Our labor numbers are strong every single month. Unemployment is at record lows, darn near still. Our wage growth and job growth is on par with a growing economy. Our GDP is solid. The inflation rate, while it had a little wavering, still on a downward trend. If you look at it, zoom out, the 1 month to month, it was up like 0.1%. Inflation is looking good right now. So all of the signs of recession do not exist right now, on top of the fact that you've got the entire collapse of the Chinese economy, which was the biggest threat to the U.S. dollar and the U.S. economy was BRICS. BRICS is kind of out the window now with the CSI 1000 dropping like 80% in this year alone, just in 2024. And now you've got a company like NVIDIA whose total market cap is worth more than the entire Chinese stock market. All that does is boost the U.S. dollar as a global reserve currency. Again, I do not see a recession anywhere in the picture here, and I do believe a soft landing coming in, brought to you courtesy of Jerome Powell. So let's go ahead and take a look at some lower time frames. We had a question here from Kevin O. He said, I was wondering on smaller time frame trading, say 15 minutes with clear direction, how do you guys determine your pullback area? Do you use just a fib, or do you look for an order block on smaller time frames, so on and so forth? I say we go with the OC guy. Go ahead and pull up your chart, and let's start looking at how we would do a setup for like on a 15-minute time frame for looking for pullback areas, and then I will co-sign onto yours, and I'll piggyback. And then Major Pan, if you have anything else to throw in on that, on some 15-minute time frame setups, would love to hear your input. But OC, go ahead and share your screen. And he's just wanting to know the process that you'd go through. Hey, Kevin O is asking about Ethereum. He did specify now. He said this is from Monday's big moves, and he was wondering, he was lost on how to enter. So yeah, if you look at Ethereum from Monday's big moves, and then he will show him how he could have entered that. He's got a picture in there in the chat too. And shout out to Daga DT. He said, you can't say for sure that Bitcoin can't go to 8K or 200K. You don't know. Absolute fact, bro. You are right. But if it breaks certain levels, we can say without a doubt that we have a major problem going on with crypto in general, because at that point we have broken trends, we have broken norms, and we have broken cycle repeats. So that it's odds. There's nothing for sure in anywhere in a chart. It's all about odds at the end of the day, and that's what we do. And if you're an investor, I don't care if you're buying gold, silver, crypto, if you're trading, if you're spot buying and hodling, if you're touching anything in the investment world, you're basing it on odds and likelihoods. And right now, when we say those things that it can't go below this, it's not that it can't physically go below that price. It's that it can't and stay in the current trends, cycles, norms, and traditions, historical patterns and trends. So yeah, Major Payne, you got something on your chart if that you can share? OC, you have to drop yours, please.
Yep.
And then yeah, I'll show some entries of how I look at trade entries. So
I don't really look at 15 minutes because I had bad experience with 15 and 5 minutes, but obviously we can definitely go for it. I normally go for 1 hour, 4 hours, and daily. But my main go-to, my first analysis is my mats and my kernel. If it breaks underneath the kernel and the mats, I'm gonna start aiming for the equilibrium zones, dynamic reactor, and volume profile. And here I already have 3 points of confluence. Plus I have my order blocks set. And my main indicator that I really love that adds up to the order blocks is Jacob. And it hits exactly on the biggest loads of confluence zones. And what I learned from Piper as well, the MVP oscillator. The what you called it? There's a name for it.
The MVP oscillator.
another volume oscillator. So I already see a little small little green dots, but lines, but not as bright as this. So obviously I'm waiting for a flip of the ribbon underneath the 0 line, but I will set alarm on the support just here for a possible entry of 50, 300. And my main go-to will be 3 points of confluence, even 4 and 5 with the volumes and the order blocks. But I don't trade on 50 minutes. So for an entry, I will look for the most confluence zone, minimum 3 to 5, to have a security that okay, this will not break,
or at least should not break.
Should not break, of course. Yeah, not all I have on the 50. I don't really watch 15 minutes. More.
Not a big,
but that's how I will turn out the Jacob indicator, the volume, the order blocks, dynamic reactor, and the oscillators.
Yeah, for the record, the Jacob Maccabee indicator that he's talking about there, Jacob Maccabee is one of the co-founders and lead developers of the Chart Prime Indicator Suite. So for those that don't know that, it's one of his personal indicators that he made. So what I do, looking at a 15-minute here, and let me go ahead and share my screen with you guys so that I can show you what I'm seeing here and how I would set this up. So Jacob the Magician, yep, that is true. How do you think the money will flow between the coins after the halving this year? I think you'll see a lot of FOMO from people that are still waiting for the halving to make sure that it's not just a fluke that's happened previous cycles before. And you'll just see a lot of new money come in. You'll see new wallet growth. You'll see new wallets open, and it will be a growth that will happen Bitcoin, and then it will go into consolidation sideways a little bit, calming down, gaining energy again. ETH to be your indicator for your alts to start moving, and then of course you'll have outliers that just move in there. But it's going to be diversification is going to be the key for those that are hodl bagging all the way through the cycle. And then if you're looking to trade, start looking for that. When Bitcoin goes into consolidation and finds support, that's where you start looking at those altcoins to hit entries on trading. So can we have a look at ICP, possible long entry? Well, we'll look and see what's there. And see what support levels there are. We'll do that in a minute. But right now, matter of fact, I'll do it on ICP for the setup. Let's do that. We'll kill 2 birds with 1 stone here since we're running a little bit short on time right now. ICP, there we go. Get you up there. All right, so I got my fibs laid up here with my Chart Prime indicators. I've got the Market Dynamics Pro on. I've got the Market Oracle on. I've also got my Oscillator Pro down here, and then I've got RSI primed set on Heikin-Ashi candles, and I can see right now on ICP on the 15-minute that we're looking at coming out below that 30% range with a nice big green candle there. So that's bullish in my opinion on that. We also have the ribbon flip, the flip of the ribbon there, and that momentum dot coming out of that green zone. That would be your bullish zone of the Oscillator Pro. And then also, we are really close here to the dynamic reactor on the 15-minute. I'm going to go, this is why we go top down. You guys can't just look at one chart. Let's go look and see of how we're looking, because on a 15-minute, it looks bullish, even though we're below that trend assistant there, the little red trend assistant. I do want to go see where we are in the higher time frame, because right now we've got this fantastically strong predictive dynamic reactor here, but because we got rejection off of the golden pocket, we should, in theory, head to the 50% Fibonacci here. So I want to see what we're looking at on higher time frames. So let's just go the 1 hour here and see how that's looking. Give it a second for everything to load in. You can see here on the 1 hour, we've got very strong down movement Heikin-Ashi candles here. We've got a good movement here with no sign of curvature coming in on the ribbon. And we have the dynamic reactor on the 1 hour sitting on that 50%. Also, we have a trend line, auto printed trend line down here that is printed off of the Chart Prime suite. That is coming all the way back here to 5 February that we have touched several times here for support, and little fake out there, but we're holding it still. That's probably going to be coming right here in line also with that dynamic reactor in that 50. So what we're looking to do is I'm looking to set a long with all of this confluence that we have here, because if you look at it time-based, by the time we get down here on this move, okay, down to this area of support from the dynamic reactor, the trend assistant, that trend line, and that 50%, we would be right in the time frame of hitting a zero line bounce on the Oscillator Pro also. So if I start to see these candles get shorter and shorter down here, you can see as they get shorter and shorter, it gives indication of upside movement. We get them shorter and shorter down here, indication of upside movement, right? That's what I'm going to be watching for my indication. Let me get rid of the Mexican spaghetti here, brought to you by OC Guy. And then I will show you how I would set this up on a run once I start to see those Heikin-Ashi candles down there on that RSI Prime clean out. I would set an entry down here, probably front running that 50 just a little bit because the dynamic reactor is going to be coming over it. And I'd be shooting that up towards the golden pocket there, setting just below that trend line that's going that auto printed trend line, the yellow line that's running right there underneath. And that would give us a 3.38 risk to reward to 1 risk to reward. So that's how I would set that trade up. If it doesn't get down there, then it doesn't get down there. I will not chase a trade, but I would wait for it to hit that level of support. All that confluence there gives me a very strong feeling of a good entry, tight stop loss, good risk management, and then we're set up for a good trade. So yeah, true, very true. Yeah, that's that. I think you're spot on with that, bro. Just like Kimmy Cole said, that is spot on. OC. Someone asked earlier if you were from OC, California. No, his last name is Asejo, so he is the OC guy. So he's down in beautiful Mexico, and I spent a whole week down there with him and his lovely fiance scuba diving. We had a great time. So yeah, that's all I got. OC tried to kill me. Oddly enough, right before he took me on this beginner's scuba diving trip that was not beginner's scuba diving, he asked me where all of my seed phrases were. I don't know what that was all about. Go for it. Go for it. I had a question here from Just Tech. He said, which Heikin-Ashi indicator? It is the RSI primed by Chart Prime. It's a free indicator. Just put in RSI primed with the D, like past tense primed, and then you'll see it, and then go into settings. You have several options there for it, and you can set it on Heikin-Ashi. So it's really simple. It works beautifully. That's the one. And then put that on and go to your settings, and then you can go in there and change it to Heikin-Ashi. It does some really cool stuff. It does candlesticks with patterns, which is really cool. We'll flip back and forth on that one sometimes just to bring it up and see what it's doing. But for the most part, I really look for those shrinking candles of the Heikin-Ashi. It's beautiful. So yeah, I got asked to do DYM real fast. So let me go ahead and pull up that and see what it's looking like here. By the way, that ICP looks like we're getting a pullback on it to that target. Let's go share the screen and you'll see that real fast before we jump over into DYM dimensions. There you go, guys. Yeah, getting that red candle. Looks like we may be coming down to that entry point. So if it guys, remember, set your stop loss. That risk management is how we protect ourselves. Nothing is 100%. And so set on a risk to reward 1 to 3, just so you guys are tracking. If you are on a 1 to 3, your trades can go the wrong direction 33% of the time and you still break even. Anything over 33% of the time your trade's going the way that you traded, you will be in profit. That's why we set stop losses. Stick to that 1 to 3 or whatever if you're a 1 to 5 guy and you're not very risk adverse, or you're a 1 to 2 and you're a little bit more risky, stick to your ratio, follow your rules, be disciplined. On a 1 to 3, 33% of the time or better, you will make profit overall that period of time. So let's get into dimensions, DYM, and let's talk about that. DYM. Let's go in there and take a look. I guess we'll do it on KuCoin. No, we'll do it on Binance USDTP. There we go, perpetual. Let's get in there and see what it's looking like. So I'm gonna go fresh and naked here. We're gonna get nude here and see what we can come up with on this chart. Let's put in some fibs. So first off, we do have a trend line here that broke and gave this indication of that upward movement there. Our dynamic reactor, we're above it, so we're bullish, but we don't have a lot of history here. So we're going to have to do something here called trend-based fib extensions because we don't have historical data to go off of here. Let me grab that and show you how this works. We're going to take it from the bottom point here. Let me turn the magnet on. And then I'll pull this up so that you guys can screenshot this. I missed the line. Turn the magnet on so I can catch these bottoms, and it slips right off of there. There we go. That is how that works. And that is a fib-based trend extension. So what I'm looking at here, I can see that this is a good sequencing ratio. I'm going to show you what these levels are so you can pull them up here. They're trend-based fib extensions, and I'm looking for that golden pocket at the 1.618, the 2.618, the 3.618. This is how I do Fibonacci's when we're in price discovery because we no longer have previous levels to base it on and gauge on, okay? So what I'm seeing right now on DYM for this is that we do have a good sequencing here. We can see that the phase 1, 618 at $7.90 played beautiful rejection there. We came back down to the 1-to-1. Look at that beautiful 1-to-1 play. That tells me that the ratio of the sequence is correct on where I placed it, right? And so looking at this pullback, I would be watching for a retest of $7.90 here to see if it's a solid support because previous resistance, right? We broke through it, did not really get a retest on it, should come back to that to get in there. That is one thing that I watch for. Also, if we take a look at the Oscillator Pro, we are overbought there, and so we are coming down right now. We did get that flip of the ribbon, and look on the RSI primed. Look what we have going on there. We're getting a little tiny red candle, shorter Heikin-Ashi, shorter Heikin-Ashi, shorter Heikin-Ashi, red candle. I'm going to be watching for that retracement down to $7.90. At that point, I would be setting a long entry on DYM, coming in right there at that 790. And then giving us a stop loss. I would say that on this one, you would be shooting for a target up here. So let's just adjust this a little bit tight and make this a little bit better. We're going to come down below this last wick over here. Anything lower than that would be getting a little bit risky. But if you wanted to, you could even come down here just to hit that 1 to 3 ratio, which is going to be right there. And that is going to be giving us this wick right here as our retest level. Anything below that, you might be looking at it coming back to the 1-to-1, but that's going to give us a 3-to-1 risk to reward retesting entry at $7.90 on DYM. Got it. If I have a trade that I can't find that 3-to-1 risk to reward, like if it's coming in at 2.5 or something like that, I just won't take that trade. It does not have the risk to reward. I stick strong to my 1 to 3 risk to reward. And if I can't get it, then that's not the trade for me. There's 20,000 assets for me to look at. So not having a position is a position. Absolutely. Let me get in here. First off, big shout out to Major Payne for joining us today, man. Appreciate having you here. Guys, if there's anything that you guys want us to bring up on these TA talks, let us know. Bring it up, in some of the classes and stuff. OC can write it down, and we'll try to address it because this is a learning opportunity. That's why we do TA talk. It's not your normal classes that we do the rest of the week. This day is literally to just teach you guys some tricks and tips and a little bit of mentoring. So, Major Payne, thanks for coming on today. We appreciated having your time and your input on the Wyckoff distribution, bro.
Thank you so much. And by tomorrow, I'm going to finish the bullish Wyckoff example too.
So I love it. I love it.
On the group chats, I'm going to post it just in case, so we can have the second example ready for tomorrow. And thank you so much for having me. It really means a lot. It's a
Yeah, anytime, brother. It was great. OC, let's get out of here, bro. Guys, thanks for joining us for TA Talks. We'll be back here next Wednesday at 11 a.m. Eastern Standard Time, going on over all this stuff and giving you guys everything you need to trade safe, because that's what we try to do here, to trade safe. As always, guys, trade safe, stay primed, and for God's sakes, use a stop loss.